I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. The USDA released its July WASDE report with key updates to U.S. and global grain balance sheets. The U.S. corn yield was left unchanged at 181 bushels per acre, but production was trimmed to 15.71 billion bushels. Stronger demand lowered 2024 and 25 ending stocks to 1.34 billion bushels, which was below trade expectations. For 2025 and 26, U.S. ending stocks were also reduced to 1.66 billion bushels, driven by lower beginning stocks and production. Globally, corn ending stocks were pegged at 272 million metric tons, down 3.2 million from June, with China and India driving that decline. Looking over at soybeans, U.S. production is forecast at 4.34 billion bushels. Despite changes to exports and usage, the 2024 and 25 ending stocks held steady at 350 million bushels. The 2025 and 26 crush forecast jumped to a record 2.54 billion bushels, backed by rising biofuel demand. Meanwhile, the new crop ending stocks were raised to 310 million bushels. Globally, soybean stocks rose slightly to 126 million metric tons as higher beginning stocks outweighed lower U.S. output. And lastly, taking a look at the U.S. wheat balance sheet, the wheat outlook saw U.S. production raise to 1.93 billion bushels. Old crop stocks climbed to 851 million, but new crop ending stocks was cut to 890 million bushels, mainly due to stronger export projections. And speaking of the WASDE, the Environmental Protection Agency's proposed renewable volume mandate for the next 2 years boosted optimism for soybean oil demand, particularly for biofuels. And with the USDA's July WASDE report, we're starting to see a little bit of some numbers actually put into some perspective. Soybean oil demand for biofuels is forecast at a record 15.5 billion pounds for the 2025 and 26 marketing year. If realized, that would be a 27% increase from the 12.9 billion pounds forecasted for the current season. Lower biofuel demand this year led to increased soybean oil exports, which are forecasted at a 5-year high. Now, with prospects of record biofuel usage, exports are expected to fall back to multi-year low levels. USDA Chief Economist Seth Meyer says the agency is trying to get a handle on just how much of an impact the biofuel mandates will have on total soybean demand.
While we lowered 24-25 soybean oil use just because early policy uncertainty here in 2025 had kind of slowed use, our 25-26 estimate shows a very strong increase year over year. As we look at RFS policies, we look at the 45Z policies and try to match that up to state level policies, and seems to be that there'll be some strong demand for soybean oil to be pulled into the biofuel sector.
As of July, biofuel production is expected to account for more than 50% of total soybean oil usage the next season. U.S. wheat exports could receive more demand in the future from non-traditional buyers. Bloomberg reported this week that Morocco will receive its first delivery of 100,000 metric tons of wheat this month. The head of the Millers National Confederation in Morocco said the country plans to step up its imports of U.S. hard red wheat. That is mainly because prices have been more competitive recently, with costs about $50 per ton, lower than other competitors. Additionally, the declining U.S. dollar is also attracting business. Morocco has shied away from the U.S. market due to high prices compared to other countries. Hard red spring and hard red winter wheat futures have fallen more than 30% over the past 2 years, with prices trading more closely to wheat in France and the Black Sea. The Millers National Confederation said the U.S. could account for about 5 to 6% of total grain imports, and that would be about 500,000 to 600,000 metric tons and add about 18 million bushels of U.S. wheat export demand. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.